Hey guys, just a quick reminder, if this video hits 30 likes within the first 24 hours of it going live, I'm going to be giving away a free 1-month subscription to our Discord server as long as you leave a comment below and are subscribed. So let's get on to the video. Hey guys, how's it going? Welcome to another weekly options trade idea video, and let's take a look at the earnings that are coming up this week. So the things that I noted right now are Tuesday before open, Autozone has earnings. And then Tuesday after open, this is probably the biggest company this week in my opinion that has earnings. That's going to be Nike. They had a huge run up these past few trading weeks. The other things I've noticed, General Mills Wednesday morning, we'll take a look at that. You know, I don't really know what to make of it. I don't know much about their stock or their ticker, but I do know their company, so we'll just keep an eye on that one. And then lastly, I would say probably between Nike and Costco, these are the two biggest tickers in my opinion that have earnings this week. So none of the other companies, yes, some of them I've heard of them. I tried looking into trip.com, but I could not find the ticker symbol because honestly, I would want to short this stock or basically put on a bearish trade if I could, because I'm assuming, you know, anything related to travel has gotten hit pretty hard given the recent illness. Carmax might be another one to keep an eye on, but I believe their stock's a little bit pricey, but we'll take a look at that as well at the end. You know, other companies like Rite Aid, Cintas, KB Home, I've heard of, don't know too much about them. Scholastic, back in grade school when you'd read books, I don't know how Scholastic is doing right now, given that, you know, schools are probably closed down and things are going online. So I'd probably be bearish on this ticker as well if you were looking at it. And then lastly, you know, there's this, I don't even know what this company is because I don't read Chinese. I'm assuming that's Chinese. But I would stay away from Chinese stocks because, again, of this, you know, trade war that could start up or end and start it back up again with any sort of tweet. I would stay away from that ticker there, but let's get right into it. So the first ticker I mentioned was Nike. Didn't have a great week this week, but again, the whole market had a pretty poor week. Let's just zoom out and look at the 1-year graph. So we've already hit all-time highs. We get back to pre-corona levels all the way back on June 8th, and then we've been hitting all-time highs for the past 2 months or so, and currently we are at a share price of just over $115. You know, it kind of boggles my mind why Nike is doing so well, because I would think a lot of people are doing a lot less shopping because of the unemployment, and Nikes tend to be, you know, more of the expensive shoes compared to other cheaper brands. But I guess a lot of people doing online shopping. I guess since sports are back in session, maybe shoes are back in style, like basketball shoes and things like that. But let's take a look to see how juicy their options are. So if I went to sell some cash good puts that expired this Friday, the at the money return on risk would be $408. Wow, it's looking pretty juicy already, to be honest with you. $408 divided by 115 times 100, which is 11,500. So the return on risk at the money is 3.5%. Not that bad, not that bad. Especially for a company like Nike, if you do get assigned shares of stock, I feel like it's a good company that you could hold long term. If the stock does drop, I feel like it would come back up to these levels at some point in the future. So that's pretty good. Let's just take a quick look at the TradingView chart on Nike. As we can see, zoom out, this is the dip during illness. And then we had this recent sell-off, just like the whole market sold off. The other interesting thing is it's right here at the 21-day moving average, which is the orange line. So we'll see if it's going to bounce off this line and up. But this earning could be a catalyst that might propel it down if it has a bad earnings session. Just paid out 24 cents per share dividend on August 28th. Let's take a look at their past earnings, which was after peak illness. They did not do well. They were estimated at 9 cents and they were negative 51 cents. So yeah, I mean, the interesting thing though, even though they had bad earnings, they gapped down the next day, but then they basically traded flat for a few weeks and then started rallying again. So I would, like I said, based on kind of my fundamental and technical analysis, that's very basic right now because I haven't really delved into this, I haven't done a deep dive. I do think Nike is going to sell off after their earnings just based on what I'm seeing so far. But let's just keep an eye on it and let's keep moving on. So the next ticker I mentioned was General Mills. If you're not familiar with them, they basically make things like cereal, they make foods and things like that. So let's just take a look at their 1-year chart. Very choppy, right? I mean, this is during the illness, very choppy, but we've been hitting all-time highs. And then ever since the beginning of this month, actually General Mills sold off pretty hard. I mean, we're down at 57. We were up at 64 at the beginning of the month. Let's just take a look at the 1 month chart here. Yeah, kind of been a straight shot down. So that doesn't look really good right now. I'm not sure what happened with General Mills while they're getting hit so hard, even though the whole market is getting hit so hard. But why are they down over 11% in the past month? We'll have to keep an eye on that. Let's take a look at the return on risk at the money for selling some puts. That would be $102 right here, divided by 5,500 in collateral. So your return on risk is going to be 1.9%, which is not good at all. Especially combined with the recent downturn in the stock, I would probably stay away from this ticker personally because this is not juicy whatsoever. And taking a look at some of these premiums, I'm assuming this is not a very popular stock. Yeah, volume is in the low 200s. Open interest is actually pretty high, over 1,000. Bid-ask spread is not that wide, but I bet you as you get further out of the money, let's say 45, yeah, no volume, relatively low open interest. That's why these are like a penny, and that's why these premiums look a little funky, why the 42.50 premium is higher than the 45 premium. So yeah, I would personally stay away from General Mills. There's nothing appealing about this ticker for me right now. Let's keep moving on. Let's just take a quick look at the TradingView chart before we do. So yeah, recent sell-off here. We did have earnings. They actually paid a dividend of 49 cents on July 9th. Let's see what the past earnings were. Yeah, a little bit of a bad beat here. They estimated at 1.06. They reported 1.02, so they were down about 4.5%. And then the weird thing is after earnings, even though they were down, they rallied up. So anyway, nothing really appealing about General Mills to me at this point. Even zooming out, it's a very choppy ticker. I don't like tickers like this. I want tickers that go up and to the right in the long-term view. So let's keep going on. The next ticker I mentioned was Costco. Now this is probably the ticker this week that I'm the most bullish on because I don't know if you have a Costco near you, but these Costcos are always packed. The parking lots are always full. You can't even get a spot to go into the store to shop because people are piling in droves. I mean, look at this 5-year graph. This is what I want to see, up and to the right. 1-year graph, pretty much up and to the right. Yeah, a little bit of choppiness during the illness. June 26th basically took off. Although again in September, beginning of this month, when the market was selling off, it got hit pretty hard. Let's see. This past week we're down 1%. Past month we're also down 1%. So, but Costco is one of these tickers where I think if you have to hold it long term, it's not the end of the world. The only downside is look at the share price, $337 basically. So not a cheap ticker. These are something that if you don't have the collateral, you may have to trade spreads on if you can't afford the cash secured puts, because I certainly can't. Let's take a look at the money premium. So that's $708 in terms of selling puts for this Friday, divided by $33,500 in collateral. So that is a return on risk of 2.1%. Not as great as Nike, but I think that's partly because Costco has been such a stable stock in terms of rising year after year, as we saw in those long-term graphs. So I think that's why you lose a little bit of premium, because it's a little bit less risky, in my opinion. Let's look at TradingView. So again, Costco also pays dividends. So all three tickers we've looked at so far pay dividends. So if you do end up long shares, then at least you'll get a little bit of money back, hopefully in the form of dividends. Pays about 70 cents per share. They have earnings coming up on September 24th, like I said. Let's see how they did past earnings. So they were down just a little bit. They estimated 1.92. They reported 1.89. And then after the earnings session, they basically kind of dipped down, but mostly flat before they really took off at the end of June. So let's go one more. So earnings during pretty much peak illness, or very close to peak illness, they actually beat earnings by a little bit, 2.1 compared to 2.06 estimated. So I suspect we'll probably get close, because it seems like the past two times they've been really close to their estimate. So right now they're expecting 2.83, which is actually higher than the prior to earnings. So we'll have to wait and see. I mean, again, there's a little bit of a sell-off here. The little worrying thing here is that it's broken down below the 21-day moving average, but it's sitting right now basically on the 50-day moving average. We'll have to wait and see when the market opens this coming week, whether we're going to bounce off it or we're going to continue this downtrend. I mean, we're also going to see what the whole market is going to do, because that's going to affect all of these tickers, honestly. But let's keep moving. The last ticker, or second to last ticker, I should say, that I saw was AZO, which is Autozone. So if you're not familiar with this, they basically are a store that sells car parts. So, you know, things like oil filters, car washes, headlights, bulbs, things like that, anything for your car. So maybe people nowadays that can't afford to buy a new car, they have to maintain their used car or their old car, go to places like Autozone to fix it up, buy new wiper blades, things like that. So the reason I brought this one up is, one, I mean, take a look at the share price. It's insanity, $1,205. But take a look at the 5-year graph. I mean, it's pretty much up and to the right. Yes, it got hit during the illness, but kind of rallied right back to all-time highs. But if there was ever a ticker that needs a split, AutoZone definitely needs a split. But that doesn't stop you from selling spreads, right? On something like this, it's very expensive because you would need $120,000 to sell one cash good put on AutoZone. Let's just take a look at the at-the-money premium because I'm really curious. So selling puts for this Friday at the money is $3,410 divided by $120,500 in collateral. That is going to give you a return on risk of 2.8%, which not too shabby. But again, this is something that you would have to sell spreads on. So I don't think this really applies in terms of cash good puts unless you have a huge account. And if your account is this big, honestly, why are you watching my YouTube channel? You should be starting your own YouTube channel and I'll watch you. But let's take a look at the TradingView chart here. And the reason I thought this was interesting because AutoZone has earnings, like we said, September 22nd. Previous earnings basically hit exactly 14.39 to hit their estimate, and then actually traded sideways for quite some time, and then slowly rallying up. The previous earnings, which was kind of during the illness, actually beat earnings by about 5.4%. The reason I bring this up is because AutoZone, and if you remember from my video from a few weeks ago, I had a video on Advanced Auto Parts, which is basically the same store. I mean, it's a different company, but they do the same stuff. And we were looking at earnings for that week too. And that earnings, they basically hit their estimate at 2.74. So I suspect, since they're basically the same company and they do the same things, I would suspect that AutoZone is also going to either get really close or hit their expected earnings. And the one down thing though is that even though they hit their earnings, they still sold off afterwards. So I wonder if AutoZone is going to do the same thing where they hit their earnings or come really close, but then also sell off again, just like Advanced Auto Part did. So in terms of predicting kind of what this ticker might do, we already have an example from not too long ago. In fact, Advanced Auto Parts earnings were on August 18th, so just about a month ago. So not that far away. So maybe Advanced Auto Parts and AutoZone will kind of be correlated or linked and do the same thing. We'll have to wait and see. The last ticker I mentioned was Carmax, and that's ticker symbol KMX. I'm going to assume CMX was taken. Let's just see out of curiosity. Interesting. CMX is not taken, so I'm not sure why they chose K instead of a C. But that point doesn't matter. Let's take a look. Carmax 5-year chart, a little choppy, but always up and to the right. You can see they got hit really hard during the recent illness. Let's take a look at the 1-month graph. The peak, they were at 101 before the illness happened, and then they dropped all the way down to 44. So they lost almost 50% of their share value from the illness. But as you can see, they rallied right back up. We're right over 103 right now. So we're actually at pretty much pre-illness levels. It is a little bit of a pricey ticker at $103. But let's see what the premiums are, because I think this is one of those other tickers that I think long term, it wouldn't be a bad hold. So right now, just looking at their premiums, they don't really make sense because at the money is only $345. And then it goes down, 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 down. Because right now, this 1 penny does not make sense with these other tickers. So I'm assuming this is not a very popular stock. Yeah, look at this. Volume is 13. Open interest is 34. So just based off this, you're going to have a really hard time getting filled. So I'd probably avoid this ticker just for that. But let's just do it out of curiosity. So $345 divided by 10,300 in collateral. That is going to be a return on risk of 3.4, 3.3%. So yeah, I mean, decent return on risk, but you're not going to get a good fill. I mean, the bid ask spread is 50 cents wide. The volume is only 13. Open interest 34. Let's take a look at some of these others. 9.23, 0.53. Yeah, I mean, if you do get filled, it's going to probably be a bad fill. So I would personally avoid Carmax right now. Let's just take a look at the TradingView graph just for fun. So similar to the other tickers where it's trading below the 21-day moving average because of the recent stock market sell-off, and really close to hopefully bouncing off the 50-day moving average and then up. But let's just see what they did in the last earning. They're actually down 18%. Their estimate was 0.04. They were at 0.03. The earnings before that, they were up They estimated 1.13. They hit 1.30. And then their most recent earnings, again, they were down, so they sold off a little bit before they rallied back. So I would probably expect the same to happen this time, where they either hit or are less than their estimate, and they probably will sell off a little bit, in my opinion. We'll have to wait and see. That's basically it. A quick rundown of the tickers that I'm looking at for this week that have earnings coming up. I'm not saying that you should play these tickers, and I'm not saying that I'm going to play these tickers. These are just stocks that caught my eye. Let me know in the YouTube comments below if you have any other trade ideas for this week. If you have any questions or comments, leave them below. And as always, happy trading.